we've synonymized to an extent ESG with good things. And I think that's a bit of a misnomer, because I don't think everything that is good, progressive, or something that we agree with has to be an ESG investment.
Hello and welcome to this week's Tea Break. I'm Al-Enazi, joined as always by my co-host Yuri. Today we're thrilled to be speaking with Arthur Kay, author, entrepreneur and advisor to the Innovo Group, specialist in urban development. Arthur, thank you so much for joining us on the show. And to set the scene, what drink did you bring to the table today?
I have gone for a black coffee, and it's great to be here finally on the show.
The coffee logs that they were using to make your coffee are actually from the factory that you opened.
It's a great circular moment to be able to see it there. so the circular economy in action, really. So great to be there.
We're looking at Asia, home of the great green tea, and some of the investments which Asian families are making. And they're looking at these sustainable clean energy investments predominantly, which kind of chimes in with your book, which was recently released, Arthur, Roadkill. And Arthur, you're writing about the transition of the cities and away from the car, and what kind of city we can build without cars in the modern day. Those of us who visit China, I mean, we've seen a massive transition there from the diesel and petrol cars to the electric models, particularly the BYD brand. Do you see that as a persuasive investment story in the electric vehicles, or do you think we should be looking beyond the electric vehicle in the way we design our cities?
As an investment story, I think it's incredibly persuasive, because we've seen the growth of a lot of these electric car companies from around the world. Stepping back from that as an investment perspective in terms of what we want our cities to look like and how we want to live better together in those cities, we argue strongly in the book that actually changing the fuel source, changing from an internal combustion engine fossil fuel-based system to a electric-based system is really not addressing the problem at all. What we argue and what we're kind of pretty passionate about is how you can redesign cities and redesign mobility systems to make them people-centric and people-first rather than designed for the car and around the car. Mass transit, it's walkability, so being able to providing the infrastructure to be able to walk and cycle. One of the roles I hold is as a board member of Transport for London, and there we're trying to move to a world in which 80% of journeys in London, you have the option but not obligation to be able to move by a range of different modes. So 80% of journeys in London being taken by public transit, walking or cycling. And this is the world where we're trying to get to. China's still at only, amazingly, 20% adoption in terms of cars per household. Places like the United States are at 92%. The rise of car ownership in the global south, because you have places like India where it's only 8% and Africa where it's just 4%, or sub-Saharan Africa where it's just 4%. And so if we look at China, India and sub-Saharan Africa, and they follow the American model of car dependency, we're going to see not just electric cars everywhere, but the car dominating our cities in a way that's going to be pretty unpleasant for a lot of people.
Fascinating points there, Arthur. And we've carried another piece by Rumu Otter, a former treasurer of the World Bank, now a lecturer at Oxford University. She says there is no excuse for wealthy families who want to prevent climate change. There are so many impact investment projects for them now to invest in. Arthur, you're also a lecturer at UCL here in London. What kind of mentality are you seeing, about these globally important issues, from among the younger generation?
I teach as what's called a professor of practice at UCL's Institute for Global Prosperity. And there I have the privilege of spending time with some really amazing students, and students from all over the world. I mean, a lot of London universities really benefit from an influx of foreign students who are coming to study here. And I think the things that strike me are both the earnestness and sincerity to which the change that they're looking to make is, but also that these are master's students who've typically spent 2 to 5 years in business already, and they're leaving big companies like WeChat or Alibaba, etc., to come to study in the UK to look at other forms of entrepreneurship, innovation, and try and make that difference. So I think it's both a financial piece in terms of moving that wealth from, let's say, broadly towards environmentally sustainable or socially progressive investments, yes, but also looking to actually spend their time, their career, their intellectual capital on making the change that they want to see in the world as well. And so it's a real privilege to be able to sit at the other side and see some of that firsthand.
Having been in Kyiv recently in Ukraine and meeting some of these innovative drone manufacturers, and also the people who are building the the shields against the drones. And that's what I found particularly interesting. They're arguing, look, we're saving lives, not ending them. So surely our military technology should be under that ESG umbrella because we're really helping society. Are you seeing these changing parameters in the nature of ESG investing?
We've synonymized to an extent ESG with good things. And I think that's a bit of a misnomer because I don't think everything that is good, progressive, or something that we agree with has to be an ESG investment. So I'd probably try and split those two things as something that we agree with and want to see in the world and something that is necessarily ESG. You could argue, for example, that fossil fuels, albeit that they have a polluting element, they have helped rise billions of people out of extreme poverty over the course of the 20th century, but you wouldn't necessarily claim that an oil company is an ESG investment. So I'd try and split those two. But to the point about the amazing stuff happening in the Ukrainian innovation ecosystem generally, I mean, I could not agree more in terms of the amazing investment opportunities. What I'd be really fascinated to see in the coming decade, and I know you know more about this than I do, is how that's reflected in valuations in some of these innovative companies and startups. Because typically when you see rapid innovation in a war zone like this, and we're seeing already US, UK, Europe learning from Ukrainian innovators in military technology, and how that's going to be a two-way street. But at the moment, I'm still seeing valuations quite depressed in terms of where it should be, and that's obviously factoring in things like the ongoing war risk and a number of other factors there. I'm an advisor to a company called Innovo Group, who are one of the largest infrastructure developers and contractors in the UAE, but also across portions of West Africa. And in that guise, we're delivering a number of bridges being built in the Kyiv region, working with UK Export Finance. But the broader opportunity is how well-positioned companies working with sovereign funds or other partners can scale up that investment, because the Ukraine Reconstruction project is going to be the biggest infrastructure and one of the most important developments of the past century. So since the Second World War, the Ukrainian Prime Minister, who wrote the foreword to the white paper that Yuri seen that we wrote with UCL, estimates that reconstruction of Ukraine is going to cost around $1 trillion over the next 14 years. So this isn't just a kind of wouldn't it be nice if. This is a essential thing that is going to happen, and the well-placed companies and investors are going to be able to take advantage of that from a moral perspective, yes, but also in terms of some of the commercial activity that will be happening there.
And the growth of entrepreneurial millionaires in Africa, is outpacing most regions, with South Africa, Egypt, Nigeria, and Kenya, and Morocco expected to drive most of this growth. Only the Chinese have taken the continent seriously. Why are banks, and fund managers and investors so against looking into this huge opportunity? A
few points to unpack in that. So the first is around why China's been so interested in Africa, and I think we all know around the huge resources that exist within the African continent. And we're beginning to see emergence of this with big infrastructure projects like the Lobito Corridor with the US and Europe coming in there, but very specifically as essentially a form of green colonialism. They're after copper, they're after rare earth metals from the heart of Africa and in the copper belt, and to extract that through Angola. So I'll be interested to see how people can invest in the African continent, but also as a value add, not just extracting resources, but how can you do some of that refining or some of that processing within the African continent and taking advantage of that human capital there. The piece in terms of entrepreneurship is a really important one, and around we've set up something through the think tank I run with Professor Moore called Fast Forward 2030, where we work in Nairobi with hundreds of African early stage entrepreneurs and look to provide them some financial resource, but also some human resource mentoring and teaching in terms of getting them going in the early stage of starting their companies. And we've got some amazing cohorts of African and Kenyan startups working with Fast Forward 2030 there.
And in terms of the refining and processing, which Arthur's talking about, we've seen him do it with the coffee, so you wouldn't bet against him doing it with other commodities.
Definitely not, Yuri, definitely not. And Arthur, thank you so much for coming on the show.
It's a real pleasure to be here. Thank you for having me.
And don't forget, we have the Global Wealth Management Summit coming up on the 5th of November. Now it's in its 8th year. The summit is FT Live and PWM's flagship gathering of private banks, family offices and wealth managers across 2 days. We have a few tickets left, so please head on to the PWM website for more information. See you next week.